Hey everybody, it's Brian Shannon from alphatrends.net. Today's Friday, the 20th of September, and the markets did finish with a gain for the most part. The only thing that lost ground was the bonds. That's counterintuitive to most people as the Fed cuts rates. Bonds, you would think, would go higher, but the market was discounting that, and that's why they sold off because they spent time advancing in anticipation of the Fed cuts. Anyways, let's take a simplistic look at these markets again with the four main ETFs, the SPY right here, the NASDAQ 100, the Qs, the semiconductors, and the biotechs. Here's the main thing when you look at this. We remain above a rising 5-day moving average. That's that orange line. And while we're above a rising 5-day moving average, we're innocent till proven guilty. So that's the theme. Now let's take a look and break it down a little bit more carefully. On Wednesday, after the Federal Reserve, we pulled back right down to that important level we were talking about at 560, and it held that level. It held right at that 5-day moving average as well, and then it broke higher. It looked on Tuesday and Wednesday like, this market is trying to break out 2 days in a row and then failed to hold those gains. It looked like we had the possibility of turning lower. And as I always caution, when we're below the 5-day moving average and the 5-day moving average is advancing, it turns us cautious, not bearish. What we were talking about, the bearish scenario would have been if we broke down and held below that level for more than an hour or so, then I would have turned intermediate term a lot more defensive. Not necessarily bearish, because how can you be bearish when the market's making a new all-time high? When you look at that weekly time frame, it's tough to be bearish. At least if you have any common sense, it's tough to be bearish when the market is making higher highs and higher lows above all the key rising moving averages. So heading into next week, I think this is going to continue to be the most important level. And then ahead of that, of course, we have this 563 and a half-ish area where we broke the new highs. And if we dip below that and, just kind of do this, I wouldn't view that as a big negative. And then continue to move higher. But if we get stuck below the 5-day moving average, same thing I talk about every single week. If we get stuck below the 5-day moving average like we did over here and start making lower highs and lower lows, well, there's no way I'm going to look to buy until we see a higher high above the flat to rising 5-day moving average. I want to avoid this nonsense. And if we're going to do this, there's no way I'm going to buy the dip. I'm going to wait for strength after the dip. I'm never going to try to buy the bottom, because the people who try to buy the bottom try to buy here, 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 etc. And once in a while they get it right. Usually they don't. The NASDAQ is battling with this prior little band of resistance right in here. And it broke through it a little bit and pulled back. This is something I had sketched in for Alpha Trend subscribers, thinking that, we're a little bit extended. It'd be nice. The best bullish scenario would be for it to pull back like this, build some energy, maybe next week, do something like this, and then to be able to push higher. That's what I'll be looking for. We will be looking at that 50-day moving average still declining, but by the middle of next week, if we get rid of this data and we're over here, well, guess what happens to that 50-day moving average? It starts to look like this. And that 20-day moving average is rising too. So we have the potential for the buyers to firmly take back control of the longer-term trend here. We have these higher lows. That's a good start. And I'd love to see it actually pull back way down into here, down towards 471, and then maybe get going. So even pull back down towards this level and then be a buyer over here. That would just set it up in a much lower risk way for new purchases, and that's what I'm looking for. Russell 2000, I'm a broken record here. I think it's too choppy to trade, so I avoid it. If you're long, raise your stop up underneath the most recent relevant higher low for your time frame. Don't give back the gains like they were given back in this sell-off and this sell-off. Instead, buy over here, and trade these positions. The Russell 2000 longer term, it still looks bullish, but it's still fighting with this prior band of resistance over in here. So it's got overhead supply still to work through. And that's why it seems like that it's just not making much progress to the upside. Semiconductors, we still have that declining 50-day moving average, and we're seeing some profit taking. It's not a big deal. We're still, positive for the year. We are more than 20% off the highs for the year, though, and we're back below the anchor from that level. Now, next week, as we get rid of this data right here, that will help the 20-day moving average start to flatten out if we hold in this area. And then by the middle end of next week, we get rid of this data. So maybe we're just still a couple weeks away of time correction for the semiconductors, and then it can make a year-end move. That would be the best scenario, I would think. I don't want to see it just run away from an unstructured base. I want to see it build a base, create a low-risk entry so that you can take a maximum position size with the least amount of risk. NVIDIA, of course, is the leader in that group, and here's what I'm kind of looking for in there. I'd sketched this out Thursday night for Alpha Trend subscribers. You can still make the case that this might be an inverted head and shoulders pattern, but I wouldn't wait for break of the neckline to purchase. Maybe over here next week in NVIDIA, and maybe that's going to set up a recovery for the semiconductors. Biotechs, as I've mentioned, I got long over here, 98.50-ish. Sold a third, I forget where, I think somewhere over in here, and then sold another third there. I bought back half of what I bought and then sold it right here. So I'm still with a 1/3 position. I still like the longer term look. I'm a trader, so I'm not going to let these gains slip away from me when I purchase down in here. What I would prefer, the best scenario in the biotechs for me would be if they do something like this, and then into next week they start to do this. The 5-day moving average comes down, and then it maybe does along these lines, and then to create a full-size position here with a stop under there. What would that look like on the daily time frame? Well, when we look at the daily time frame, that might look like we come down like this for a couple of days, create a higher low, and then get going, and then perhaps we could see that weekly breakout, and then it seems like a reasonable expectation that at some point, maybe in the next 3 to 6 months, it could make a 20% rally up towards that 120 level. The financial stocks continue to behave real well. This is the most recent relevant higher low if you're long in there, so keep an eye on that. Energy names, they are starting to pull back a little bit from the place where they're supposed to. That is the year-to-date anchor, the 50-day moving average, the 200-day moving average. There's still a mess. There's still something I would avoid. And if you're looking for Bitcoin analysis, I will do that for Alpha Trend subscribers over the weekend. Have a good weekend. Thanks for tuning in.